love to talk about credit, and we've been able, Susan and I have had so many success stories on the WREC show. We've actually had, we do credit makeovers. And so I can tell you some stories about people who thought that their credit was hopeless. And we were able to run a credit simulation on them and give them a plan. They worked their plan, and they were able to move out of a very small house into a very large, much larger house. And their payment went down instead of up. So that was a win-win. And they just had another baby. I think it's like their second or third child. They just had their baby last week. So perfect timing to get in a house, to get a bigger house and an extra bedroom. So there's a lot of fun stories that Susan and I get to see, and some of them kind of make you tear up, because people think their credit's hopeless. The biggest problem with credit that we see in our office are people who go through divorces. One time, I had a guy who taught. He did the the flight simulators, the training for FedEx, and he was talking to me one day, and he said, "Joe," he said, I teach about credit too, and I teach about financial wisdom too." He said, "I teach it to every one of the new pilots that come to work for FedEx." And I was looking at him like, "What?" And he said, "Yeah." He said, "I get up in the front of the room, and when they have their first class on initiation day. These are pilots coming in to fly for FedEx." And he said, "I'm going to give you a little lesson." He said, "Now, first, we're not going to talk about flying planes." He said, "We're going to talk about credit. We're going to talk about making money on your money, investing your money." Right, John Keller?
Absolutely.
All right, so this is his lesson. Stay married to your first wife. He really did. And he meant it. Because what happens, you got pilots, that make, $300,000-400,000, well, not 400,000 unless you're way up there, but most of them make at least about 200,000 or 300,000 a year. And then they get divorced, and guess who gets their 401k? Stay married to your first wife. But anyway, so that's my story about credit, and I'm making this up as I go since I just found out I'm going to be speaking. But I want to give you some ground rules about credit. Credit, if you have a really good score, some people say, "Well, what's a good score?" A really, really good score is a score that's over 720. You're actually in the best pricing tiers when it comes to mortgages, and in some cases, big purchases like cars and things like that. If you've got a 720 on a FICO score, you've got a very good score. The highest is 850. The middle score, mediocre score is around 680. Is a mediocre score. It's not a bad score. You're not going to get the best pricing on that, but it's. And help me out here, Larry, if you want to chime in. He's with Alliance Bank. Now, a score that you could still do a mortgage with it, but you're going to pay more for the rate is 620, 640. Those are your minimum scores before mortgage companies are like, "Nah, we don't really want to do business with you until you get a higher score." Now, back in the old days, in the 90s, we used to do a loan application, and we'd have to hand carry the actual loan application upstairs to DataFax, and they took 3 days to do a credit report. Today we get them done in a few seconds on the computer. But then I'd have to wait a couple of days, and they'd call, and they'd do everything manually. Then I'd get a call from Laurie Nadasta, and she said, "Hey, Joe, this is Laurie upstairs. I got your credit report done on Miss Smith." And, she said, I had to get my green gloves out. She said she's BTR. Y'all know what BTR stands for? Born to rent. Yes. Born to rent. But now, sometimes she calls and say, "Oh, Joe, you need to go get Mr. Jones a house. He's great." Well, anyway, today we do it all on the computer. And it takes a few seconds, and everything is computerized. And a lot of your mortgage underwriting programs today, you're underwritten first by a computer before a human underwriter ever sees your file. So today, even more importantly than back then, you want your credit scores to look good. Okay, so I want to tell, before I go into the next phase, and I'm making this up as I go.
Let me ask you,
yes.
Underwriting, is that just simply evaluating? That's always a misnomer to me. Who's underwriting?
Thank you, Gwen, and I need y'all to help me today. I'm among friends. I appreciate your question. Today, underwriting, there's two parts to underwriting. You put the loan application in. I get all your information, Lynn, and your income, your assets. I pull your credit on the computer that comes back within 5 seconds, and I've got all 3 credit bureaus and everything, Michael, that you have on your credit history. Then once I've got all of that, assets, income, how long, where you work and how long you work there, and all that, then I hit a button. And the computer system is hooked up with a modem, of course, and it's underwritten through Fannie Mae or Freddie Mac on their software system. And it says, well, John Keller, his income to debt ratios are a little high. I'm just making this up. His income to debt ratios are a little high, but hey, his credit is sterling, and he's got a lot of money sitting in the bank. When he gets done closing on this house, he's going to have plenty left over. This is pretty good risk. And it says approve eligible. Okay, and then so at that point, I call John up and I say, hey, John, you're looking good. We need to get your tax returns, your W-2s, and your pay stubs, and we need to get your bank statements, and let's move forward. So if he's buying a house, then at that point, if he's got once he gets a contract signed with Pat Goldstein up here at Crylike, then Pat sends me the contract, and I call up John and say, let's lock this rate in. And let's order your appraisal. And that's how it goes. Well, then you get the appraisal back, and now you've got all the supporting documents, and I'm making it simple. But then we turn it into a human underwriter. Now, the big difference today in the way that mortgages are underwritten is that we used to, that was it. I mean, you were approved, and you went to closing, and that was it. Not today. Today, compliance is so strict that right before you close, they're going to pull your credit again, right before you close. That's why it's important that you don't go out and open any new accounts while you're processing for a mortgage, and you don't add any balances to your existing accounts. And please, for whatever reason, do not get a 12-month same as cash. And I talk about this on the radio all the time because people do it. Well, it was 12 months same as cash. I don't have to make a payment for a year, so I didn't think it would hurt if I bought all my refrigerators and my window treatments and everything to go in the new house 12 months same as cash. Let me tell you what 12 months same as cash does to your credit scores. It tanks them. And I'm going to go into my next phase about credit. Here's the next thing about credit that a lot of people don't know. 30% of your credit score, and I bet everybody in this room has at least 3 credit scores. 30% of your credit scores are derived from your revolving credit activity. So, do you have something?
Yeah, I had a client call me. She was upset with her bank because she had a mortgage with the bank. She paid off her mortgage and she had a home equity line. And she was going to do some future repairs, new roof and painting, whatever. So she kept on. But she paid off that. So they came back and said they had closed the line of credit. It hadn't been used yet because her credit score had dropped because she wasn't making any payments on anything.
Thank you.
She had paid off her mortgage, and so she was furious because she said, wait a minute, you've got a line of credit against a paid off house. If I don't pay you back, you've got all my equity, and it was, $200,000-$400,000 house. And so she was just furious at them because they had closed the line of credit because her credit score had dropped. Exactly what you said. Could you
Thank you very much. And I actually advertised my show on Dave Ramsey's show. I love Dave Ramsey. He believes in no debt. We kind of diverge at that point from each other because my philosophy is there is good debt and there is bad debt. If you want to get started and I believe you can use leverage as a tool, but you got to have good credit to do it. But going back to that, let's come back in for a landing. Yes, ma'am.
Back to the 12-month same as cash deal. What about layaway? If somebody goes in and says, I need a refrigerator, can I put this on layaway because it's on sale right now?
I think that's a very good point, and I'm glad you brought that up. I think it's important that you know that they're not going to report anything on your account until you go and actually buy that item. Sir?
You talked about 3 credit bureaus that you actually use. Can you talk a little bit about the scoring with each one and the one that you have more faith in than the others, or
yes.
an average score?
yes, our lovely government, and I'm sure that if any of y'all are all in business, so you've had to deal with the government, and I apologize if there's any government agents in here. Gee, man. But anyway, there are now multiple scoring systems, which is very important because the mortgage companies with Fannie and Freddie and FHA and VA and rural housing and all of your government mortgage programs are going to use the FICO scoring system, Bear Isaac's FICO scoring system. That's the only scores that matter. And that's really, it's Experian, TransUnion, and Equifax. Those three big bureaus, we call them the big three. But when you go on annualcreditreport.com or you go to get your credit report off the computer, one of those free ones, it's a lot of times done on the Vantage score system, which scores a lot higher than FICO. And I've had customers say, well, you said that my credit score was 580. They were BTR at the time. And I had given them a workout plan, I said, you do this, in 60 days, or 90 days, come back to me. We should have 40 or 50 points on the board. You should be okay. But they call me, well, after I talked to you, I pulled it off of annualcreditreport.com, and I already have a 630. Why are you getting a 580? Because the annualcreditreport.coms and the stuff where you go get your consumer reports just off the system is a different system than FICO, and it's not going to work on a mortgage. You have to use the FICO. Yes, ma'am.
I got 3 real quick questions. If you have LifeLock and that gives you a credit score, is that a fair, Isaac?
I don't know. I don't know the answer to that.
Second thing, I've heard that depending on the day of the month that you do your credit score, if you just paid off a balance, your score is going to be better that day than 2 weeks later when you might have a higher balance.
Let me speak to that. I'm going to come back to where I kind of got off on the rabbit trail. Yes,
okay,
ma'am. One more.
This is back to where you were speaking. Okay, you're working with a client. They open up a credit card to do home improvement. They pay it off before it's even due, before they even get the same bill. Is that still going to ding their credit?
Okay, say that again.
Okay, somebody, while they're in the mortgage process, they take a Lowe's loan, for example, to fix their old house. And they go, oops, I shouldn't have done that. They pay off the balance. So it's like they've opened an account, but by the time the first bill doesn't even come out, they have a zero balance.
Okay.
Does that still work?
I don't know, and here's why I don't know. Each credit card company has a different time when they report to the bureaus. Most of them report every month, and that's important because some of them don't. Some of them report every other month or not every month. Most credit cards are going to report to the big three between the 8th of the month and the 12th of the month. So when I'm talking to customers, I'm like, we really need this to cycle. We call it cycling. That's when the creditor reports to the bureaus, and the bureaus have a chance to put it in their system, and it rescores your score based on the new information that came in that month. That's called cycling. And so usually, if you're going through a credit workout with me, I'm going to say, Alex, I know you paid this thing off on the 7th, but let's wait till the 16th. I want to make doubly sure that it has cycled and that it's going to reflect on your credit score. Or you paid this thing down. Paying off doesn't help. Paying down does. Now let me go back to where I kind of went off the point. And you're keeping up with my time, right, Eric? Okay. So 30% of your credit score is comprised of your revolving credit activity. And right now, this could change next year. So this is March the 18th, 2015. Right now, you'll be fine if you keep your owed balances on credit cards or revolving credit below 50% of your total credit limit. You'll be fine. It's not going to help you. It's not going to hurt you. So never, ever, if you want to keep your score up, allow your owed balances on credit cards to go over 50% of your credit limit. So if you have a $10,000 credit limit, John, you never want to borrow 1 penny over $5,000. Make sense? Now, if you want to build your score, I call it putting points on the board. Yes. Then you never want to borrow over 30% of your total credit limit. So if you had $10,000 credit limit, you never want to borrow $1 over $3,000, sir.
When you say borrow, you just mean spending on that card.
Right. That's right. Thank you for clarifying that.
And is that at the end of the month carrying over, or if you just run up a bill to 9,000 out of it, 10,000 during the month and pay it off at the end of the month?
It depends on the cycle date, when they report to the bureaus. That's why I just say, as a general rule, don't ever borrow over that. If you're trying to put points on the board, you don't ever want to borrow over 30% of your credit limit. Is it going to, obviously, if you ran it up to 9,000, you had a $10,000 credit limit, but then you got it paid off before they reported to the bureau, you're fine. But who knows when they're going to cycle, you see. Sir?
Joe, if you address this to you or Larry, let's say you have a credit card that you just want to open, and let's say they give you a $3,000 limit on that, but you never charge anything out.
No, it doesn't help you.
Doesn't help us at all.
No, the only time it affects your score is if you open up a whole bunch of credit. And I've got to tell you, I actually got to train personally with Robert G. Allen back in 1988 in San Diego. He wrote the book, Nothing Down, Creating Wealth and the Challenge. And he was quite a star. Of course, I had sold a lawn and landscaping business, and I had to pay off the nose to do it. But I never regret paying that money because I learned something from that guy, and I forgot where I was going with that. But you were talking about, opening up credit cards. So there was this guy that he brought in to talk to us that he was talking about raising capital to buy houses. Now, this was back in 1988. He came out, and he had this big, fat wallet. And I'll never forget it. He unsnapped it, and he went like that. He was holding the wallet, but he went like this, and all these credit cards just went slinging out. Just went slinging out across the floor in these little transparent, you know what I'm talking about, sleeves. Yeah. And he says, this is how I finance my houses. He said, I use them credit cards, and he had probably 30. Well, anyway, his credit score was in the tank, let me tell you, because he went and got all those at one time. You never want to do that. Don't ever do that, please. And it doesn't work today anyway. But anyway, if you go out and get a whole bunch of new credit really quick, it can tank your scores. Not very much, about 10%. Now, if you're trying to build your score back, so what I would suggest, fastest way to get results is by using revolving credit. If you already have a credit card and it's older, it's going to help you more because it scores higher the older the account is. And again, let me tell you a little magic formula. This is what I do with people who come in and they say, I've got a 580 score, but I need to buy a house in 60 days. Love you guys when you do that. What agents, especially realtors, will do that to me. We got to close in 60 days. I'm like, good luck. But anyway, what we do is we tell them, go get a secured credit card. I send them to Capital One. I don't have a dog in the hunt, but I know Capital One reports every single month. They get a secured credit card for $250, and I'll say, look, go out, and this is just a tool. You're not going to use this credit card for anything except to build your scores. Go out and get $19 worth of gas in your car using that card. Because if you really want to put some octane and getting that score up really fast, this is how to do it, at least for right now. $19 worth of gas in a car. Wait a month, you're going to get a statement. You got to make a $10 minimum payment. Make the $10 minimum payment on time. Then go down to the gas station, put another $10 in the car. You never want to let the balance drop below $12 because whatever reason, on some cards, if it drops below 12, it rounds down to 0 and you get no points. And you get the best results if you stay with a balance owed under 20. So I just say, just play the game for a couple of months. Let it cycle at least twice, and we may see 40 points on the board. But anyway, Susan and I know I'm running out of time. Susan and I have learned, we're trained on the credit simulators. It's like a flight simulator. We pull all 3 bureaus on your credit, and if you need help, if your scores are too low or you're really trying to get into the best price bracket, we'll run a simulation on it, and it'll tell you the fastest way you can put the most points on your credit score with the least amount of investment out of your pocket. Sweet. We've done them so many times now, we don't even have to do this credit simulation. We can just look at it and go, we know exactly what you got to do.
Does it matter if you have one credit card or a bunch of credit cards?
It's not good to have a whole bunch of credit cards. And Larry, if you want to speak to that, I know the bank side, He's with Alliance Bank. I'm actually with Evolve Bank, but I do mortgages. Larry does banks. Can you speak to the difference between the way the banks look at open lines of credit versus mortgage?
Well, we do the same thing. We have the same score, minimum score 650. You know, and obviously being done with 700 is a lot better, but we have a minimum 650. One thing I want to speak to is medical debt. We find a lot of credit reports. People have had surgery, if they've done something, they got insurance. The insurance company pays a percentage of it, and the hospital says, well, you know, you owe $200 right now. A lot of times people say, well, I'm disputing that, or I'm doing this, and that just sits on that credit report. And it doesn't go away, you know, but it goes 60, 90 days, 120 days. You think you're in dispute, you're just arguing. That is tanking your credit score. We see a lot of people that have had surgeries and medical debt, and they're just totally going to change the rules.
Right.
That's going to help that a little bit. But be aware if you've had medical, surgeries and stuff, to watch your credit report. The other thing is on that annualcreditreport.com. Everybody in here gets to go once a year to that website. That's the only one that's free. That's what the government said. You get all three. Annualcreditreport.com. Not any of these, not free credit. Annualcreditreport.com. Every one of us should go in there once a year. You just log everything in. They'll ask you your social security number, all that. You can print out all three of your credit reports from all three agencies.
It's not going to be the FICO scoring
No.
system, but you will be able to see what kind of activity is on there.
Right.
And if there's something
Fraud,
on there that's not yours, you'll know.
That way you can find any fraud or anything.
That's right. That's right.
One
So
of my friends suggested on that, Larry, you tell me if this makes sense, to actually break that up into 3 uses. So you do one credit report now, one credit report 4 months from now, another credit report 4 months from now, and then you can recycle so that you can follow all 3 of them over the course of the year.
I didn't think you could go but once a year to that
No,
site.
you can do each credit report separately.
okay, real quick, I'm going to open up for questions, but here's my reference. We strongly recommend that if you are wanting to know about your credit and how it's calculated, formulated, nobody knows the magic ingredient, but you can get pretty close by going to myfico.com. That's my, F as in Frank, ICO, myfico.com is very reliable site for knowing what's going to affect your credit scores. I want to open up for questions. I got a couple minutes. Yes, ma'am.
Joe has helped us. I just got to give her a plug. Joe has helped Troy and I. She got me a 3% on a rental property a few years ago, and it's just unbelievable. But you said something that I don't know why I never thought of it before. You said that you say this person has a lot of money in the bank. If we have cash in a stock account just sitting there, would it not make sense to take the cash out of the stock account and put it in a checking account just so we look cash rich?
Okay, there's a difference though. The credit scores have nothing to do with, they don't know how much assets you have in the bank. That was on underwriting for a loan. But the more liquid you are, the more money you have in reserve, of course, the better you're going to have it in underwriting. But really the money you have in the bank or how long you've been on your job has nothing to do with your credit score. Good point, though. Anybody else? Marcella?
Well, as he was saying, is it safe to put your social security number out there on the internet like that?
If you're going to that site, it's a secure site. But that's the way they're going to find your credit score.
Don't do it when you're sitting in a hotel room.
Right.
Or at Panera Bread.
Right.
Yes, ma'am.
You help us out because I know you tell people do not give your social security number out, do not open accounts. But when an insurance company asks for your social and they all do it, it's okay.
It's a soft hit. It doesn't show up as a hard inquiry. It doesn't go against you on that. Good point. So you can shop insurance. One more thing, you can also shop mortgage companies. If you shop like within a 2-week period, you can get multiple hits from your shopping like mortgage companies as long as they're coded as a mortgage company. All the inquiries are coded coming from a mortgage company. That allows you to shop. The same thing with cars. You're shopping for cars. The thing you run into trouble with is if you're shopping for a car and they're going to check your credit and all that, you have to make sure, are they running the credit through a finance company or are they running it with a car auto sales code? Because as long as it's the same type of company, even though the inquiries show up, they don't count against you except for one within a 14-day period.